All right, traders. All right. Good morning. Happy Sunday. Now, I know it's afternoon for some of you. I know it's evening actually for some of you, but you know what I mean. Wherever you are in the world, welcome. Welcome once again to another monthly Trading Poker Club study session. Traders, I'm sure by now many of you realize that I consider this part of your Trading Poker Club membership to be by far the most valuable. Yes, the cards that you hold in your hands can be a constant day by day reminder of some of the most powerful trading concepts that I rely on. Yes, I believe those cards can help you if you keep them in front of you. I think they can help you um, approach your trading in a far more orderly fashion. Yes, I believe those cards can help you apply a plan-based method to your trading. But it's in these Trading Poker Club study sessions where we pull everything together, where we're able to lift the curtain, as it were, and to go inside of each concept in a far deeper way than any card can ever do or accomplish. And so over time, what we do is we pick apart every single card. We also look between the cards. Yes, there are certain things that can't be put on a card. And those things sort of tie the cards together. And we touch upon those transitional things that sort of link the cards together into a cohesive whole. Today is one of those things I'd like to talk to you about. At its core, it doesn't have a card in your deck, what we're talking about today, but there are components of what I want to talk to you about today that are on your cards. And so that's exactly what I'm talking about. We're going to tie two cards together and come up with something greater than each one of those cards. And so in order to do that, I want to first bring up a whiteboard here. And I want to talk to you about your moving average cards. Okay. Now, in all actuality, there are 5 key moving averages, 3 of which are used more predominantly than the other 2. Okay. Now, those 3, the most dominant moving averages are the 200 period moving average, and all of these are simple moving averages. Okay. There's the 20 period moving average. You have a card for each one of these moving averages. Okay. And then you have the 8 period moving average. And these represent the 3 most dominant moving averages in terms of use, heavy use. Now, as a very quick overview, the 8 period moving average is only used for power trending moves, which means that once your stock enters into what is called a power trend, a strong, almost 45-degree angle like steady move to the upside, or a 45-degree angle like steady move to the downside. Not power moves lack a lot of volatility. They tend to be closer to beeline moves versus zigzaggy moves. So you can have a zigzaggy move up like this, or you can have a power trend move like that. And that's what the 8-period moving average is used for. Once you have identified, right, that your stock is power trending, then it is not the 20-period moving average that you focus on. You actually change the 20-period moving average for the 8-period moving average. So this brings me to the 20-period moving average. Well, the 20-period moving average is that's your bread and butter moving average. Your bread and butter. That's what you should be on every single chart, no matter what. It is the key vertebrae of your stock. It's the backbone of your stock, of everything that you trade. It's the backbone. The 8 is not the backbone. The 8 is a substitute for the 20. A lot of traders get this mixed up. They think it's an addition to the 20, but that's not right. The 8 taps the 20 on its shoulder and says, Mr. 20-period moving average, I'm here to take over for a brief period of time, or what might not be so brief, but I'm here to take over. You can go rest now. I'll let you know when my job is over. And so that's how I use the 8 and the 20. It is the 20's job to handle the stock when the stock is not power trending. But when the stock is power trending, it is time for the 20-period moving average to take a break, and I actually replace it with the 8. I don't have them together. Do you understand this so far, guys? Do you understand this? They get changed. They don't stay on my charts together. All right? Now, I know a lot of traders do that, but I'm not a big fan of that. All right? So now, the 20 is the main. So what is the 20 used for? Does it have a specific purpose? Yes, it does. Its purpose is a directional one. Its purpose is to give you a very quick view of what the directional bias of your stock is. So if the 20 is rising and your stock is above the 20, you should predominantly be a buyer. If your 20 is declining and the stock is declining under the declining 20, all right, you should be a seller, a short seller. So for instance, if this is your 20, and of course that blue movement is the stock, you should be a buyer. Now, what does this picture tell you? It tells you to not be concerned with the color red. Yes, you're going to get the color red, but that's not to be concerned. The color red's going to happen intermittently. The stock is going to drop intermittently, but you can't get afraid of those drops when the 20 is rising. And I was actually talking about this with a group of my traders last week. I encouraged that they ask themselves this question. Okay? I encourage that they ask themselves this question. Who are you when the color red comes? So look, your stock is rising. The stock is rising above the 20-period moving average. You should not be afraid when red happens, but ask yourself, who am I when the red does happen? When a red bar happens with a rising 20, who am I? Who do I become? Do I become scared? Do I get nervous? Do I get itchy to get rid of the stock? Or am I relaxed like nothing's happening? Is it a non-event? Do I stay firm with my riding the 20-period moving average out? You see, the answer to that question lies at the core of great market play, of sound market play. Who are you when the red bars come? All right. And so, who are you? So that begs the question, who should you be? All right. Well, you should not get shaken. You should not be concerned. You should not be moved. You should not be worried. You should not get nervous. You should not sell when the red bars come with a rising stock above the rising 20. That's the power of the 20-period moving average. It keeps you true. It keeps you sound. It says, don't focus on the bars, focus on me. This is one of your most valuable tools because it irons out all the noise. It smooths out all of the confusing movements and has you and forces you to focus on what matters, what is true. Now, E-Rich is asking, what time frame do I suggest? Well, I do want you to understand that no matter what time frame you choose, this applies. This is universal across all time frames. But I do suggest for training purposes that you day trade off of the 2-minute and or the 5-minute. Those are my two dominant time frames, 2-minute and or 5-minute for day trading. For swing trading, you're going to use the daily chart, sometimes the 60-minute chart. So just like day trading has two time frames, day trading has 2-minute and 5-minute. Swing trading has 60-minute and daily time frame. Investing has weekly and monthly. So each style of market play has two time frames. All right. You got this so far, guys? Just a few of you let me know before I move on. Yeah? Okay, good. This is good for us to meet like this and lock these things down. All right? Now, this brings us to the 200-period moving average, right? The 200-period moving average is the overseer of all. It is not a directional moving average. It does not do the 20-period moving average's job. Do you understand? It's not supposed to. But it is supposed to draw a line in the sand that separates day from night. You see, above the 200-period moving average is daytime. Below the 200-period moving average is nighttime. Do you understand that most traders don't even know how to consider whether or not their stock is operating during the day or during the night? And so the 200-period moving average draws that big line in the sand. Above the 200, it's daytime. Below the 200, it's nighttime, which means that if you are below the 200 and your 20 is declining, oh my God, don't you dare be a buyer. You're at nighttime and the 20 is pointing downward. Think about that. Wow. Do you know how many losing traders look for bottoms in a situation like that? That's why they're losing traders. They're nighttime, they're under the 200. The 20 is down, but they're looking for a bottom. That is a recipe for always being poor, always. Oh, yes, you get lucky every now and then. But just like Vegas, Las Vegas, or the casino, you get lucky every now and then, but They don't build multi-billion-dollar casinos because they lose, right? So think about it. When you go to a casino, you're walking into a multi-billion-dollar casino if you go to Vegas. But do you have a multi-billion-dollar home? No, they're the winners. And so if I tell traders this all the time. You can break these fundamental principles that I teach you and get lucky, but that doesn't mean that you should do it. All right? Same thing on the other side, guys. Here is your 200 period moving average in this scenario in my drawing here. This is your 200 period moving average. Your 20 period moving average is rising. Your stock is rising above the 20. Your 20 is rising above the 200. Don't you dare try to pick a top. Whoever tries to pick a top in a scenario like this will forever be poor. Forever. They will get lucky every now and then. But I promise you, their trading account will look like a power trend to the downside if that's what they do. And so knowing what each one of these moving averages do is at the core of proper fundamental trading. When your stock starts to power trend, you've got to bring on that 8 period moving average. You see? Which replaces the 20. Now, why is it that I don't like all 3 of the moving averages on the chart at the same time? Why not just leave the 8 instead of bringing it on and removing it? It's because somehow psychologically we're drawn to the closest thing to the stock. You see? So psychologically, no matter, even if you know that right now the 8, right now in the middle of this move, the 8 is not relevant. The 8 is only relevant in the far right-hand side of this move because it's only in the far right-hand side that the stock is power trending. The stock is not power trending in the middle. So it's the 20 period moving average that deserves the respect in the middle, but it is on the right-hand side when the stock starts power trending, it is the 8 that deserves respect. But look at the middle. Look at how the stock is breaking the 8. No matter how much you know that doesn't matter, psychologically, you treat it like it matters. Just because your mind sees it. Your mind sees the stock breaking the 8, and that makes you nervous when it's not supposed to be there. It's not supposed to make you nervous. It didn't break the 20. So I leave it off. I take it off. It's just a mouse click or 2. And I only bring the 8. It's not like I remove the 20. I never remove it. It's just that for periods of time, I bring the 8 in addition, right? But I'm going to focus on the 8 and not the 20, which I'll do naturally anyway because the 8 is closer to the stock. No matter how much you try, you're going to place attention on whatever is closest to your stock. All right? Should new traders take what off, Malcolm? I've been talking like 20 minutes about this. Yes, don't have the 8 on the chart when your stock is not power trending. Should I say it in a different language? Yes, that's the whole point. It's my whole point here. Only bring it on. That's my suggestion. Only bring it on when your stock is power trending. Now, SS is asking, Oliver, how do you tell in real time rather than in hindsight that the stock is power trending and not zigzagging? Excellent question. Excellent question. Can you know before a stock is power trending that it will power trend? No. You can only know a stock is power trending in hindsight. You can only realize, hey, my stock is power trending. Now put the 8 on. You don't have to catch the power trend right from the first bar. How can you know that a stock is power trending from the first bar? You have to know it in retrospect. But as soon as you do, you put the 8 on. That might be 8 bars in. That might be 10 bars in. That might be 7 bars in. However many bars it takes for you to realize, once you do, apply that 8. All right? Doesn't have to be some exact science here. All right? Patrick is saying that is so true. With the 8 MA on, I tend to give it more weight than the 20. Yes. And you give it more weight when you're not supposed to give it weight, when it's irrelevant. The 8 is not always relevant. And that's the problem. That's the problem I have with traders having all 3 on the chart simultaneously. Now, some traders have gotten so used to it, they still do okay. But I am telling you guys, I teach you this way because I went through this. I dealt with these things. I realized that I was reacting off the 8 when I shouldn't have been. So these are all lessons that come from my own experience. How long does a power trend last on average? Impossible to have really an average. You don't have to know. What tells you when it's over? The 8. Period. Just ride it out. And when the 8 says, okay, power trend's over, it's over. That might be 15 bars. That might be 40 bars. That might be 20 minutes. That might be 3 hours. They're all different. Guys, trading is like fishing. You know? Like when you cast that hook into the water, you can't choose which fish bites the hook. That's not your choice. When you get a bite, you pull the fish out. Sometimes it's little, sometimes it's medium, and sometimes it's big. Trading is like fishing. You know? Your winning trades are going to be small. Some of them are going to be medium. Some of them are going to be big. Your power trends, some of them are going to last long. Some of them are going to peter out real fast. Some of them are going to be in the middle. It's not your job to choose which fish bites the hook. It's not your job to choose whether or not this trade is big, medium, or small. It's your job to follow your plan and to collect whatever you get. You guys understand? You got this? All right, awesome. Okay. Now, that is part one. Okay, that's part one of what I wanted to cover with you. I needed you to understand very thoroughly the purpose of each one of these moving averages and what their jobs are. Do you know how many people throughout the trading world know moving averages, but have no idea what each one of their purposes are? Almost all of them. It's crazy. All right. Take an image of that, take a snapshot, take a picture. All right. Wait, let me get my. All right, now take a picture. Boom. Okay. NFT it. Digital art. That's right. Make an NFT. Sell it. Just give me a little taste. Let me wet my beak a little bit. Only a few of you are going to know what that means. Let me wet my beak a little bit. That's right. Yeah, some of you know that. Yeah. Okay. So this is part one. Part two, in part two of today's study session, I want to go over my number one play off the open. I needed to do this first, but I want to cover my number one go-to play off of the open in the stock market. I don't get this every day, but when I do, it is played, and it's played usually very aggressively by me. But I want you to have my number one go-to play. And I would like for you to see how many times it happens for you this upcoming week, starting Tuesday. We have a shortened week, right? All right. So let's do that now. I will go to charts, but I need to demonstrate this first, right? So we're going to take that all-powerful 200 period moving average. Now, what's interesting about this moving average, guys, is that the flatter it is, the more powerful it is. That's crazy, right? You see, the 20 is different. The 20 is the smoother the slope of the 20, the stronger the 20. So if the 20 is smoothly sloping to the upside, like at a 45-degree angle, that's when the 20 is at its most powerful. Or if it's smoothly sloping to the downside. The 200 is just a reverse in a sense. The flatter it is, the more powerful it is. The deeper that line in the sand is. Now remember, above the 20 is daylight, daytime. Below the 20 is nighttime. Now, what's my go-to play? First bar of the day, whether you look at whether you trade off the 2-minute or the 5-minute or both. All right. The first bar, if the first bar starts somewhere near the 200. Now, I need to make this clear. Near doesn't mean touching. It can be a little bit above. It can be a little bit below. It can be right on it. We're just talking about in the area of the 200. All right? But if we start the day, if the stock starts its life today anywhere near that 200, that's going to be interesting. And if your stock starts to grow off that 200, this is the first bar, it's still trading and it grows more off that 200. It continues to grow off that 200. I want you to, boom! I want you to buy that bar before it finishes trading. This is my famous surge off, 1 bar surge off the 200. All right? 1 bar surge off the 200. Now, normally, I would tell a trader that if they're trading the 2-minute chart, you buy in the second minute of the 2-minute bar. Don't buy too early. This is my only exception. If that bar grows in the first 25, 35 seconds, you can still do it, even though it's not past the first minute. Don't miss it. Boom, get in there. This location is so powerful. This location has such high odds of follow through that you've just got to get in. Is it 100%? No, nothing in life is. We've got to deal with the fact that it's not 100%. That's what stops are for. But you got to buy that bar moving off that 200. All right? It's got to be strong off the 200. It's not any bar off the 200. It's a strong bar off the 200. It's not gradual. It's not a crawl off the 200. It's a power surge off the 200. Understand the difference. It's just not a green bar. It's a power green bar. It's just not a movement. It's a surge. I'm talking power. I'm talking, an abrupt thrust, right? Lori, all I was saying is that, you can get into this bar early as long as it is a power green bar. At the point that you recognize it's a power green bar off the 20, it's okay to go. All right? Luz is saying, can we go to the 1-minute chart? I never really understand this question. Luz, I never really understand this question because if this is a 2-minute chart, isn't the first minute the 1-minute chart? Why do you need to flip to the 1-minute chart? It is the 1-minute chart for the first 60 seconds, no? You follow what I'm saying? It doesn't become a 2-minute bar until the second minute. But the first minute, it's a 1 minute, so flipping is not going to do anything. All right? All right. Now, guys, the odds of follow through on this is somewhere near 87%. So you got an 87% chance of follow through after that bar, which is ridiculously high. It's so high that this one thing can make you wealthy. That's how high it is. Guys, there are trading algorithms that make millions of dollars that have a 37% winning ratio. That means that out of every 10 trades, they win 3.7 of the trades. So let's call it, they only win 4 times out of 10. A little bit less, actually. And they make millions of dollars. Why? Because when they win, their wins are dramatically larger than their losses. You don't need a high accuracy if your wins, when you get them, are much larger on average than your losses. And so there are many algorithms out there with a 37% accuracy rate that make millions of dollars. Imagine something with an 87% accuracy rate. This is what you have here. This is extraordinarily high. Anderson's asking, how do we get in anticipation? Just hit the damn buy button. What do you mean? Do you have a buy button? Hit it. Press it. Click it. Stand on it. Am I missing something? Just buy it. The moment you recognize, hey, I got a surge off the 200, boom, hit the buy button. 87%. Now, I'm going to explain to you why. This is going to be a review for many of you, but some of you are not really my traders. You're my poker club family, but you're not my trading family yet. So for some of you, this might be new. For my traders, this is going to be a review. Now, this power bar does something very special. It shoots its influence or its power to the right. That's what this bar does. It shoots green power to the right. You see? Now, notice how I draw the arrows. Like the further you get to the right, the less the arrows start to go down, right? But to the immediate right, it's very powerful. The arrows start to weaken the further you go to the right, okay? But so they're most powerful right next to the bar. And as you get further away from the bar, the arrows start getting thinner and thinner and thinner and thinner until they disappear. So this influence is most powerful to the immediate right. Okay? What this means is that the color red will have a hard time breaking through the arrows. I'm going to repeat that again. The color red will have a hard time breaking through the arrows. So if a red bar starts to move down after this green bar, there should be nothing to worry about. So there will be a tendency for a move down, boing, to shoot back up. Those green arrows to the right are like support. They're obstacles for the color red. The color red might get through the first 1 or 2, maybe 3, but not all of them. The odds of getting through all of them are not there, and eventually the green arrows shoot the stock back to the upside most of the time. Does this make sense? Power bars shoot their influence, shoot their color to the right. And that power is most powerful to the immediate right. All right? Okay. Now, there's something else. I don't know how. Okay. The 200 period moving average. Luis, I'll get to that. The 200 period moving average. This is not just sitting there. You see, it is shooting its power upward. Wow. You see, it's shooting its power upward above and downward below, but we're not concerned with downward below because the bar is a surge to the upside. So think of this. You've got your green bar providing support to the right and your 200 providing a force to the upside, which now means that if your stock tries to break through all of this, the odds are very low that it will get through that double knit. That's right, Karan. I call this double knit Egyptian cotton. My traders know this. Why is this the double knit Egyptian cotton zone? Because when I started making money as a trader in my firm, I'll tell you this story. I was placed as a head trader on my desk. So I was moved from my original desk and I was placed on a desk with 7 other traders. There was 8 of us, and I became the head trader. Every desk has a head trader. These traders did not respect me. First of all, I was the youngest of all the traders on the desk. And I was the newest trader of the firm. I mean, I was in the firm 2.5 years, but still these traders were there longer before me. And so one of the partners in the firm took me to lunch one day. Oliver, let's go to lunch. And I explained to the partner that I was not getting the proper respect from the traders. And this partner gave me some interesting life lessons, and this is interesting corporate lesson. He said, Oliver, you're making very good money now. This is the first thing I want you to do is go out and get a very, very nice watch. And he wrote down a few names and he gave me a card. See this person. I said, a watch? Why? This is because, Oliver, you're looked at as a kid. He said, kids don't wear expensive watches. Then he said, here's another card. I want you to see my guy at this place. And I want you to go get some custom shirts. We're going to leave the world of on-the-rack shirts. We don't buy our shirts off the rack. We have them made for us. And when I went to that guy, he showed me, he pulled out these books that were swath books that I could feel the fabric, and I had to choose the color of the shirt. Most of them are going to be white and blue, right? But the fabric, I had to feel and pick the fabric I wanted. And one of them was really nice. And I said, wow, I like this one. What is this? And he says, Oliver, you're an aristocrat. That there, my son, is double knit Egyptian cotton. That's the finest of the material we have. The strongest, the most beautiful, double knit Egyptian cotton. And from that day onward, all of my shirts were double knit Egyptian cotton. All right, a long story to tell you how powerful and beautiful double knit Egyptian cotton is. This is your double knit Egyptian cotton zone. The opposite movement will have a hard time getting through the double knit Egyptian cotton zone. You do not want to get shaken out in this zone. You do not want to get nervous in this zone. You do not want to kill the trade in this zone. This zone is your friend. And it is because of this zone that this has an 87% accuracy rate. The power surge right off the 200 period moving average. Anhum, thanks. That's right. Awesome. All right. If the size of this power candle exceeds my maximum daily loss, is it better to not enter? Well, yes, but you should be catching it before it becomes excessively large. So you're watching this bar grow off the open. First, it starts as a dot. Then it starts as a little bit of green. Then it starts as a normal amount of green. Then it starts as a healthy amount of green. Boom! That's when you strike. You strike the bar before it gets too excessive. Now, if you weren't watching it and now you see it after the fact and it's excessive, then you can't. All right. If it's beyond your risk parameters, remember your risk parameters, your maximum loss per trade always rules. All right. Now, I'm almost scared to do this, but I'm going to do it. I'm almost scared to go to this level. All right. Almost scared to go to this level, but I'll do it. My traders know this. When I buy into the green bar, when I initially buy into the green bar, I buy here, and I shoot additional orders to buy underneath me. So that if let's see this, give me a second here. Erase this. So this is my original buy. All right, this is my original buy. Let's do this for a second here. My original buy is here. Boom. And then I shoot additional buys underneath me. So these are buys all the way down the bar. Why am I doing that? Because if the stock backs up into the double knit Egyptian cotton zone, I will get more and more and more. Why am I willing to do that? Why am I willing to buy on the way down? Because it's the double knit Egyptian cotton zone. The odds of breaking through that double knit Egyptian cotton is very, very low. Now, I'm saying that this is not for most of you, but if the stock pulls back, I get more long, more long, more long, and then the gains are wonderful, wonderful gains. Not just gains, wonderful gains. All right. So that's my go-to play. Guys, this is the same in reverse. Power surge opens near the 20. First, it's a little bit of red. You're like, uh-oh, is this going to be a surge bar? Then it becomes a normal amount of red. Then it becomes a really solid amount of red. Boom! That's when you want to go in to that short. Boom! As soon as you say, this is solid, go. All right? I will throw orders, more orders above me, just in case. If the stock backs up on me, more short, boom! Wonderful gains. Remember that 200, this red bar is shooting its influence to the right. That 200 is shooting its influence downward, adding tremendous pressure on any green movement upward. So any green movement upward is going to meet with this double team against it. Boom. 87% chance of follow through. Now, someone was asking, Oliver, what if this is in the trap zone? If the surge is right off the 20, you can ignore that. Just go with this play. 87%, no matter where it's happening. Remember, the flatter the 200, the more powerful the 200. Good question. Why is the flatter 200 more powerful than the sloping 200? I really don't know. I can hypothesize, but it just is. You're going to have to trust me on that. And over time, your experience will show you that. All right? How many lots would I play? I play a lot. I play a lot with these because of the high success rate. Now, guys, when I'm wrong, so 13% of the time, right, I'm wrong. And I will have to seek counseling because this is one of my heavy plays. Yes, I do have a counselor. But 87% of the time, it's a really, really, really fat win, you know? Every trader needs a go-to heavy play or two. This is mine. And I wanted to share it with you. Now, what I want to do, let me get my signature here, guys. All right. Take a snapshot. I'm going to erase it. All right. Take a picture. All right. Boom. NFT it. You got it? Just let me wet my beak a little bit. Got it, guys? Got it? I can remove it. All right. Now, why don't I go to an example here. Bring up my try to grab this. Give me a second here, guys. I'll get it straight here. All right. Are you really ready for this, guys? Are you ready for it? This is Friday. I just want to make sure. You ready? Alina says yes. You sure? All right. Here goes. 1, 2, 3. Boom! Oh my God. Are you kidding me? Are you freaking kidding me? This is free money. I couldn't draw this better. Really? I couldn't draw this better. Xilinx XLNX Friday 5-minute chart starts its life right on the 20. First, it's a little bit of a green speck right on the 20. Then that green speck grows. Let me get my pen up here, guys. Sorry about that. I didn't get this up there earlier, but here. So, first, it starts its life here. Then it's a little green bar. Then it's a normal green bar. Then it's like a nice sizable green bar. Boom! Where's my protective stop? Right under. Guys, you know what I'm doing? Just in case I'm throwing some orders beneath me, just in case it backs up. There's a lot of time and back up like that. But wow. Some of you know mandatory add in the first RBI. It's hard to not make money with this. This is going to be one of your best, most powerful plays off the opening. Yes, your stop should be under the bar, traders. This type of bar should not be failing. Do not give it extra room. Do not hesitate. You break that bar's low, something is seriously wrong. These are not supposed to be failing. got it, traders? You can use a 2-bar stop rule, but you don't have to. It should be that short. You got it? Do you love it? Tell me you love it. Awesome. Now, go to work. Go to work, traders. Do your thing. I love you guys. My babies. My traders, my babies. Google Gaga. Google Gaga. Google Gaga. Oh, how cute. How cute. Qué lindos, mis bebecitos. I know. I stopped growing up a long time ago. All right, traders. Enjoy the rest of your Sunday. Enjoy your holiday weekend. We're back at this game on Tuesday. Boom!
All I want is you. All I want is you. All I want.